Welcome to the Political Vigilante. My name is Graham Elwood. We're here with a returning very special guest, co-host of Boom Bust on RT, Christy I. Christy, how you doing today?
I'm doing well. How are you?
Okay. So I wanted to bring you on for several reasons. First of all, it was great having you on last month, and I've been talking almost relentlessly to my audience about the power of cryptocurrency, and I have started. Because I'm on this platform, Rockfin, that pays us in this, they're a token that they mine, and I've converted some of it to Ethereum, and I've converted some of it to Bitcoin.
Mm-hmm.
And obviously, like today, Tuesday, the 27th, Bitcoin has gone up somewhere in the neighborhood of $600 or $700 just today.
I know. So, I mean, since last we spoke, it's literally up like another 30+%, which is amazing.
Which is like, I want people to really track this. Like in the 4 or 5 months maybe 6 months that I've been truly paying attention to this, I converted some in July when it was $9,000. Just to let people know. So what is that? July, August, September, up 4 months. It's gone up $4,000.
Yeah.
Which is
best year-to-date return asset ever.
Ever. Like there's no, I don't like, oh wow, my IRA earned 0.003% or whatever. Like you got to be kidding me.
Exactly.
So let's talk about, first of all, several interesting things. As I pay more attention now and I watch your guys' show, and I watch some other people on YouTube, I watch Max Kaiser and some other people that are interesting. And so I've heard the last couple of days about decoupling and how Bitcoin was sort of tied to the stock market a little bit. And this past week, the stock market has not been doing well, and yet Bitcoin is going up. So I wanted to, first of all, tell us what you're seeing just in the month since we spoke last time. I've seen way more big, like the Square bought 50. I mean, these huge companies are like jumping in there. And then there's like, it feels like a fear of missing out thing of they're like, well, if JP Morgan, Chase, and Square are doing this, then we better dump, $20 million in there or whatever. So what are you seeing as somebody that studies this? So what are you seeing? And especially this last week and since we spoke last?
Yeah, so I guess there's two big pieces of information there, right? Like first you have the decoupling, because before cryptocurrency market, they kind of traded and they were kind of correlated to the US equities market. Every single time we had a big down day, the Bitcoin market also took a dump. Every single time we rallied, crypto market also rallied up. So there was this big correlation going on, but more and more it seems like it has a bigger correlation with gold. And this is going to be really key and really important because gold is going to be the big safety asset here. And this also coincides perfectly with the two big pieces of news that came out last week, which one obviously was PayPal. That was huge, and that PayPal was going to be onboarding Bitcoin, Ethereum, Litecoin, and a handful of other coins onto their platform in order for payments for its 300 and so million users, and it's in their merchant markets as well. So that's huge. That's going to onboard the entire mainstream consumer onto the cryptocurrency platform. But then the other really big piece of news, which kind of sparked this entire rally, this 30% rally, literally from 10,000 to 13,000 plus, this was when the IMF called for a new Bretton Woods movement. So this statement initially kind of went under the radar. A lot of people didn't quite grasp the implications of what it meant. So, I mean, to start off, Bretton Woods was basically the last time the global currency system was backed by a commodity or a hard asset. So in this case, it was gold. And right now, Bitcoin is very correlated to gold. After that, it's very self-explanatory. So the Bretton Woods system was done in 1944 by the Allied nations after World War II. And the agreement basically said that the participating nations would hold a fixed exchange rate between their currency.
Hey, Christy, I'm sorry to interrupt you again, but we're hearing that microphone.
Sorry, is that really bothering you?
Yeah. There you go. I was like, what is that? Either there's like a squirrel eating on the phone or, but
so
yeah.
Sorry about that.
No worries. We got it fixed so we don't see 1,000 comments. But yeah, so you were saying.
Yeah. So between the Bretton Woods, the agreement, basically the dollar was at the center of this entire schema because the entire agreement was basically pegging every single country's currency to the dollar. And the dollar was backed by gold at the time, at least. So basically it was this chain of value that had a buck stop at the end at the dollar. So we have since moved very, very far away from that. So that's why the IMF said last Thursday, we're staring down at a second Bretton Woods movement. We're looking at a complete restructuring and a great financial reset. So obviously this isn't going to happen overnight, but the groundwork is getting laid and it's coming. And so as you pointed out earlier, all the companies are now getting ready for it. PayPal, Square, MicroStrategy, other public companies, all the big hedge funds, they're now pooling their money and allocating their funds into Bitcoins as a hedge against inflation. And right now, we're not just talking about inflation. You have companies, citizens, people. We have a lot to worry about. You worry about the potential debasement of currency. You worry about these zero interest rates in your savings account, or even potentially negative interest rates, where you're getting penalized for hoarding and holding and saving cash for a rainy day. You worry about being forced into buying these expensive equities in your IRA by your pension plans, even though these valuations are astronomical right now, because you have no control over it. It's in your pension plan. They invested for you. They're going to put it into equities at very bad prices. So all of that is really, really bad. But as we said before, Bitcoin is completely immune to that, just like gold. It's the only hard asset with a fixed reserve that is completely immune and works as a great store of value.
So yeah, and it's really it's amazing to watch when, especially all of these companies, CEOs and all these people who literally are quoted 6-7 years ago going, Bitcoin is a bunch of nerds online, it's rainbow currency or whatever, and now they're like, oh yeah, we're dumping $50 million into there.
Exactly. And it's crazy. And there's going to be a mad scramble because you have them, like Square, they recently put in about $240 million into it. PayPal is now going to be hoarding it because, as we said, PayPal is going to be a closed loop system. So every single time you buy a Bitcoin on PayPal, it's going to stay on PayPal. You can't get it out of the PayPal system. So that's why it's going to be a double-edged sword. It's going to be great for spreading it towards mainstream consumer, but it's basically going to be PayPal's way of just hoarding and holding Bitcoin.
And what that does, correct me if I'm wrong, when these companies hold on to these massive amounts of Bitcoin, it just drives the price up.
It does, because as we said, there's a limited amount of Bitcoin in the world. There's limited amount. Once you mine them all, there's not going to be another printing. There's not going to be a re-release. There's not going to be an airdrop or anything. The asset is going to hold up due to supply and demand.
Okay, so obviously, and I've heard a lot of people talk about this. I've been talking about it on this show for a while. I mean, before COVID, I was talking about all of these indicators that our economy is teetering. The 60% of the population that can't afford a $500 to $1,000 emergency. Again, before COVID, the housing bubble, the commercial real estate bubble, the car loan bubble. Like I read in February, there was like 2 million car loans that were 90 days late. That was, again, before COVID. Like all of this is before COVID, and all COVID did was exacerbate this.
Exactly.
I'm hearing all these financial, and I'm sure I've heard you guys talk about it on Boom Bust too, that the market is going to crash in some way. And when it did in March, the pandemic shutdown drove all the markets down, and Bitcoin got taken down with it. It dropped below 4,000, but then it slowly has obviously made its way back up. So do you see Bitcoin dropping again when this market crashes? And if so, will it go down as far as it did in March? Or are there bigger people realizing there's more of a long term? Because wasn't the reason, correct me if I'm wrong, in March is just a lot of banks and stuff had bought into Bitcoin and then just like sold it because they needed cash in March. I don't know. I don't know all the particulars of that, but can you explain that to us and what potentially the next crash will do to Bitcoin?
A lot of that was due to liquidity issues because Bitcoin has been a highly leveraged product. There we have a lot of futures outstanding in the open trading platforms. It was a very, very leveraged product. Some people were leveraged about 100 to 1. So when you suddenly have a severe market dislocation, as we did back in March, a lot of the exchanges, all those positions just got liquidated. And as such, just like with the equities markets, the crypto market also had a lot of algos, a lot of bots, a lot of people who couldn't meet those leveraged positions when they came due.
I'm sorry to interrupt, but myself, for starters, and probably a large portion of my audience might not know what leveraged 100 to 1 means.
That just basically means that you are basically trading 100 Bitcoins, but you're only putting up 1 Bitcoin. So if Bitcoin goes up by say $100, you just made $100 times 100 because you're leveraged. It's a multiplier effect. So it's really great when things are in your favor, but it's also the same way down as well. So if it loses $100, you're losing 100 times 100.
Ah, okay. Okay. That makes sense.
Yes.
Sorry to interrupt.
No worries. So it allows for massive, massive swings. And that's exactly what happened because no one was expecting that suddenly came on overnight. A lot of people did not have time to deleverage their current trading positions. So as such right now, if there is another dislocation right now, people are more prepared for it. There are more puts, which are basically options for protections to the downside. There are more puts out there in the crypto market as well as in the equities market. People are more prepared this time for such a dislocation. But I think the big difference now since March is that Bitcoin has basically been recognized by the IMF, by the financial community as a very stable asset. It has basically proved itself in March, since March, that it is a store of value. And since March, we have basically printed billions and billions of dollars into the system. As such, that leads us to debasement. Whereas gold and Bitcoin, they have just steadily climbed their way up because they are the truest and purest form of value.
Right. So it feels like to me, and like I don't hear any, I mean, I don't hear anybody saying the stock market is not going to crash. It feels like it's, I mean, what you talked about, the printing of not just billions, but literally trillions of dollars have been injected into the economy since the first CARES Act. They're having another one of their stupid two-party slap fights over this next CARES Act and how much of it goes to Wall Street and what breadcrumbs the American people get, you know, whatever. I'm sure Nancy Pelosi will make sure we all get ice cream, which is exciting. It's exciting. A lady worth $160 million have two ice cream fridges. That makes me happy to be an American. And watching the debates. Oh God, whole nother episode. But so it feels like to me, in just this little knowledge that I have of this arena, this newer knowledge that I have based on watching the American empire collapse. It feels like when the market does crash, Bitcoin will get taken down. It'll get
taken down a little bit, but as we've seen in March, it's going to recover and rally way faster than any other asset that we've seen. And one of the reasons is because right now, as you've mentioned, there are huge problems that are going to cause this collapse, right? The IMF right now is trying to tackle this dollar shortage problem that is arising. We currently live in the system basically where 79% of all the world's transactions are basically in dollars, but the US is only 25% of GDP. So if you think about it, how does that work? I mean, it really doesn't. So it leads to these things like dollar shortages and the problems in areas like South America, South Africa, Argentina, Brazil. They're all beholden to the US dollar, even though the US is not its largest trading partner. It's basically because the US dollar is the reserve currency and the settlement currency. And it's just so strong that it's essentially breaking the entire system. So now with the coronavirus, you add that on, as you said, you add coronavirus into these emerging markets and these less stable countries, they're staring at a full default of the retail banking systems. And these countries, they haven't printed money yet. They haven't come out with any massive stimulus plans yet. Like we haven't heard from Brazil or Iran. We only have the major economies printing, the US, the EU, China, because basically all these emerging market countries, they're entirely undercapitalized. They know that the second they print, it will basically cause hyperinflation because their balance sheets are so weak. So as you said, with a market crash, that's not going to be stemmed from one of the developed countries. It's going to come from a trickle down of all of these collapses of these emerging markets.
How bad do you think it'll be, and when do you think it's going to happen?
That is hard to say because essentially what the central banks are trying to do, they're trying to stall and push it out. But it's all kind of coming to a head because basically right now with the IMF and all the central banks, they are trying to hold off and stall for as long as possible. And right now with coronavirus, it's kind of creating the perfect backdrop for the central banks to introduce their new central bank digital currency, the savior, the great reset, to help us get out from all of this massive, massive debt. So the IMF last week, they alluded to this huge change coming to the global financial system. And so while right now there's not much details on it, everything is hinting and pointing and leaning towards the fact that CBDCs are going to be the new standard because the current fiat money system is basically on its last leg.
So CDDC, that's a decentralized currency. Is that what you mean?
Absolutely not. That is going to be a central bank digital currency. Basically the opposite, the complete opposite of a decentralized currency. It's basically just going to be a digital form of your current fiat money. It's going to come with all the problems that fiat money has. But the thing is, it's going to be even worse because that means everything is going to be traced. So, I mean, that's just putting it mildly, right? Because authorities, they use every single crisis, every single period of crisis to impose these emergency powers that kind of become more permanent. So, I mean, the easy example is the Patriot Act, still in effect nearly 2 decades later. Why? Because once you have that power, you don't want to give that up. So the Patriot Act has basically become this symbol of the massive expansion of government power. But in the beginning, it was always sold as necessary for your own good and for your protection. So now we're looking at the Federal Reserve, all the central banks, they're looking at CBDCs and they're saying that this is going to be wonderful. This is going to save the world. This is going to save all of these emerging markets from crashing because it's going to be a system of instant payments and digital dollars. No one's going to be beholden to the US dollar anymore. No one's going to be beholden to the SWIFT network anymore because the US controls it. We have financial freedom now because we can send payments internationally. This is going to be so great. We can reach all of the unbanked household where the stimulus payments couldn't reach them. We can even have universal basic income if we want because we're paying people direct. This is going to be great. So yeah, that's how they're selling it right now. It sounds great, right? It sounds superb, super noble.
Wow, there's just so much bullshit laid in that marketing scam. I'm just like, oh man.
Right? I mean, it sounds great. We get a universal basic income, stimulus plans directly to you. You don't have to fill out any paperwork.
Oh, and all we have is a chip planted in my head or whatever they want to do next to make it safe.
Exactly. So that's the other half of it. But if you want that, every single piece of digital dollar, every single CBDC, every single e-euro, every single one of that is going to be trackable. So that's just another example of a power grab situation. The power to borrow and distribute money right now currently goes through the elected representatives in Congress. Now, that would be completely bypassed by the central bank. So they now don't have to wait for the bipolar Congress to agree on a stimulus or a UBI or anything. They can just create trillions out of thin air and just distribute them to the household without any congressional approval. Congress also has no power to stop the Fed from printing endlessly trillions and trillions of dollars and distribute them because the Fed is an independent quasi-public agency. So it's actually quite free to create and distribute as it sees fit.
So
scary, isn't it?
Yeah. So I saw that video about the IMF talking about that, and I've heard about other countries creating their own digital currency, but you're saying it'll be a centralized digital currency.
Correct.
How will that affect the decentralized digital currencies like Bitcoin and Ethereum and Litecoin and others?
Well, Bitcoin and all of the decentralized currencies, that is going to be the solution to this very big, scary world. So in a world where CBDCs rule everything, so before I get into that, there are a couple positives to it. Like, as I said, there's going to be universal basic income. There's going to underpin the poor side of society. There's going to solve SWIFT and the International Payment Society, but everything. But the thing is, you're going to have absolutely no control over your money. You're going to have no control how you spend it, when you spend it, who to spend it from, especially in a world where we track everything and everything's based on behavioral economics now. So, but the thing is, the only way to basically break out of it is Bitcoin and gold. They have these two assets. They have proven themselves to be a great stable currency as all of these fake fiat currencies and these fake CBDC currencies, they get printed. I mean, the more we printed this year, the more gold held up relative to it. And Bitcoin even more so, as we've seen. So these are basically the only two ways, the decentralized currency, the decentralized lending, that's basically the only way to break out of the system. If you don't want to be tracked, if you don't want to have your behavior analyzed by all this big data machine learning that's out there tracking everything.
the people that run this world are just full on assholes. I just don't know how else to say it.
It's a very dangerous tool. And here's the great thing. The biggest irony of all of this, like we say that now we have universal basic income to fight poverty and everything. The biggest irony is that the primary source of the impoverishment and the inequality, that's basically from the Fed itself. Yeah. Because when the Fed's liquidity taps were full on flowing with their permanent open market operations, this was all for Wall Street. But 95% of the citizens, they were actually worse off as you have wage stagflation and rising inflation. That has all eroded the standard of living and the purchasing power of labor. So basically, that means the Fed, they first created the inequality problem, and then they come riding to the rescue via this massive power grab and expansion of power via CBDCs.
It's like we have an obesity epidemic and Coca-Cola comes out with Diet Coke and goes, see, we fixed it. It's just
that is a great example.
Bitcoin is like, no, you need a plant-based diet. This is what you need to grow your own food and have a plant-based diet. And they're like, well, how about Coke Zero? How about cherry-flavored Coke Zero? Oh, God. So let's talk about this election that's coming up between these utterly corrupt people, and what are you seeing? Like, how are the markets, like, what do you think they're going to do in reaction to either Trump or Biden? And then how do you see Bitcoin reacting if it even responds at all? Or Bitcoin is kind of it seems like, correct me if I'm wrong, it seems like Bitcoin is becoming more and more just on its own thing, and everybody realizes it's valuable, and it's becoming less and less tied to all this archaic bullshit, like which corrupt rapist warmongers in the White House. But tell me.
It is. It's not going to be so much affected by the equities market. It's going to be more so tied to the movements of gold. And either way, if we're looking at the equities markets going into the elections, I believe we're going to see a lot of volatility simply because right now, Trump has kind of made it known that he's going to be against it if he doesn't win. He's going to cause some sort of disruption, or he's going to call for a recount. Basically, a lot of people are prepared for this to be dragged out. As we've seen before, it's going to be dragged out. It's not going to be settled on November 3rd. It's going to be something that's going to have a lot of uncertainty. No one's going to know where anyone stands until probably sometimes either late November or early December or something like that. So I feel like the month of November is going to be terrible for the equities markets. It's just going to be nonstop volatility. But either way you look at it, Trump apparently wants to do massive stimulus plans, and it's going to be very good for companies. It's going to be very good for Wall Street. Biden, on the other hand, he has massive taxes in store for all the corporations who are not going to be happy with him. But the thing is, he also has massive stimulus plans as well in place. So if Biden wins, the tax hit is going to hurt a lot of corporations initially. But with the massive stimulus plans that the Democrats have, they're basically on track to just print trillions and trillions and trillions of dollars in stimulus, where Goldman Sachs estimate that if we have a full sweep by the Democrats, they will print out enough stimulus to last us through like 2023, which is going to be great because that just means you're printing more money. It's going to be great for Bitcoin. It's going to be great for gold. But basically, you're just trying to print your way out of debt. And once it's 2023, where does that debt go? I mean, that's going to be someone else's problem at that point. So who cares, apparently.
Good old American kick the can down the road, which is just a fun game to play. Okay. So let me ask, it's just, we're in such a broken system, and it's just like all of these Band-Aids are being put on it.
That's why they kind of want this great financial reset, which is what everyone is calling for, essentially.
Right. Because this is like, and this is why it seems like, again, going back, like Bitcoin is really at the center of this sort of financial freedom, this decentralization, and all these old systems, the centralized banks, and the way they profit off of war. They love people going into debt. I mean, all of it. They've flexed their muscles in so many awful ways that to see them go down, hey, thoughts and prayers. But so one of the things we talked about the last time you were on the show was like, if this big crash comes and since all of these, I mean, not only is there a mortgage bubble, but there's a commercial real estate bubble, right? And what that's going to do. And you talked about printing all this money, and there could potentially be a run on the banks where, like, let's say you have $5,000 in your bank account. They're going to say, oh, all we can give you is $500. Now, because you cited some other countries where Greece or where some other places, I think, where that has happened.
Turkey,
yeah. So, and it sounds like that's coming no matter what, whether it's Biden or Trump or whatever, like that. It's like, it's almost like both parties kind of don't want to win a little bit because they know that's going to come no matter what. Like whoever's in the White House is going to have to own that. And when that does happen, how do you look for it? And how do you, just for like the viewers of this show, because that's, again, why I'm slowly moving stuff into credit unions. I'm moving stuff into crypto because I just, the big banks are going to be like out of money, but kind of explain that to us and what to look for, because I already saw there was a story today or yesterday that a friend sent me. The HSBC to overhaul business model as third quarter profit tumbles 35%. That to me feels like, oh, it's starting.
I mean, it very well could be starting because, as I said, like these banks, they are not generating any money, but the big difference is between today and 2007 is that 2009 is because luckily banks did learn some lessons. Earlier this year, when we did have the crash back in March, all of the banks did stockpile all their reserves. They boosted up their reserves, had all of their assets in cash because they actually expected this wave of defaults to hit. And yes, this wave of defaults is hitting. We're in the midst of hitting it. So we're not only talking about these retailers and real estate and commercial real estate. No, we're not. We're talking about full-on businesses that are going bankrupt. You had JCPenney, you had Men's Warehouse, I believe, and so many other retailers. So when that happened, all these banks, luckily, up until now at least, they were kind of prepared. They had built up their reserves, bolstered everything up. JP Morgan especially padded it up all the way. But the thing is, there's only so much that they can do because if everybody defaults, no bank is going to be prepared for it. It's a calculated risk right now. And right now, the banks are currently within their estimates. They are within line. So as of now, I would say that we are safe. But the problem is if these defaults and these bankruptcies continue and they compound. And that is the fear. And that is why everyone is trying to get a new stimulus bill passed quickly in order to try to backstop this wave of collapses that would essentially collapse all the banks.
Yeah, and it feels like maybe some of them have learned their lesson, which is in terms of why they're putting their assets into Bitcoin. Maybe that's why they're like, at least we'll be in Bitcoin if we lose all of this. Because I'm just seeing, like, first of all those big companies, Neiman Marcus, Hertz, that you're talking about. And then I just got an email from YogaWorks, right? Where that's where I go to yoga. And they said, I've been going online obviously since March, but they just sent out an email to all of their members saying, we're getting rid of all of our in-person studios across the country. And they're in like a half a dozen cities. You're talking about 40 or 50 physical locations. There's probably a half a dozen or 10 or so more in the LA area for sure. I mean, and so I'm sitting there going, and I know some yoga teachers that were like substitute or part-time, they're gone. So there's each studio had 10 to 12 classes a day. Now there's just 10 to 12 online classes. So all those teachers, all those people working there, they don't have that. And then I'm thinking about all of the commercial landlords that are now being told this massive whatever, some of these yoga studios are huge. This 10,000 square foot whatever is like, bye, we're gone. So then what, and who's going to take the place of that? I mean, I'm hearing even the big digital companies that are doing good business, Hulu, Netflix, and them. Everyone's working at home, and they're standing around going, well, why are we paying this huge lease on this massive, 10-story office building? So when all that is starting, I'm like, what's that going to do?
Exactly. And that is the fear, because if we suddenly have all these big asset devaluations, that is going to put tremendous stress and tremendous pressure on the banks. So that is why all these continued stimulus packages, that's why everybody is so pressed to get them passed. Because what it does is that every single one of these new stimulus packages, it basically acts as a little bridge, a little band-aid to try to get through coronavirus. Because that's the thing, everybody thinks, and everybody does think, that right now coronavirus is temporary, and hopefully it is. Hopefully we get through it in another 6 or 8 months. But the thing is, it's lasted longer than anyone has anticipated. We all thought it was only going to be a 3-4 month blip for us, but it hasn't been. And that's why you have all these closures, all these real estate devaluations. There are new priorities now. Instead of spending on clothes and fashions and luxury goods, people are stockpiling things like food and emergency gears and guns, things like that. So there's a shifting of assets, a shifting of priorities, and obviously a shift in consumer behavior and work from home and things like that. So because of that, everybody still thinks it's going to be temporary. Nobody's wants to work from home for forever. So they think that this is just a temporary brief trend, that if we can get through it, real estate prices, they can bounce back because consumer behavior is still very strong. Consumer spending is still quite strong here in the US. Because of that, they think that we can bounce back if only we can weather through it. If we have enough stimulus to bandage the gap and get all these businesses through it without them being bankrupt, foreclosed, evicted, whatever, everything's going to be great. And so that is the risk. We're trying to balance out and estimate how long Corona is going to last, and if we can just print enough money, enough stimulus to get everybody through it. And the great thing is, the US being the reserve currency, it can actually print whatever it wants, because apparently here in the US, we have the benefit of not having a hyperinflation problem if we did do this. So imagine any other poor emerging countries that we just mentioned, they do not have the luxury of this option. So that's the problem. They are going to be in a far worse off position after coronavirus, because they do not have the means to build this financial bridge to even try to weather through the storm.
So how are we able to print all this money and not have hyperinflation?
Because of the fact that everybody in the world depends on the US dollar for trade, for settlement, and everything. And basically, as we said, the US dollar is so strong that there is a shortage of US dollars right now. So the US can just keep on printing. It's still going to be the reserve currency. Nobody wants it to be the reserve currency. That's the other factor. Everybody wants to be free and liberated from the US dollar, because it understands that this continued printing cannot last. It cannot last, and eventually it will collapse the dollar. So that's why you do have other countries such as Russia, such as China, such as India, and even Europe now, they're starting to recognize that, and they want to try to find a way to build a new form of settlement, and to find a new standard of trade that goes away from the US dollar, because it understands that you cannot have this massive, massive debt while not having any sort of growth at all. We're facing a negative GDP round right now. So you cannot have this amount of debt while not growing, while having this massive amount of unemployment. Basically, it's not sustainable at all.
Yeah, because it feels like, I mean, when the stock market crashed in 1929, the effects of the depression weren't really felt till about 1931 or 1932. And I feel like the effects of this like 7-8 month shutdown aren't really going to be felt till like a year or two from now. And then if the markets and all that happen, and then it's
because we have band-aids, because we're very happy right now with just having a band-aid to help us get through it. The problem is, it's going to leave us in a much worse off position, because it's almost like, the analogy I like is like you're trying to use all the stimulus money to roll this giant boulder up a hill, which is great, and you're like halfway through it and everything. But the thing is, if you don't have enough stimulus, if you don't have enough backstop, if you don't basically have enough reserve growth strength and all that to actually push that thing all the way up the hill and get through this entire coronavirus episode, then basically that entire thing is going to roll back down, and you've basically used up all your dry powder. You used up all your fiscal policy. You used up every single monetary policy string that you can pull. And then what are you left with? A great reset.
Yeah, I mean, do you see the federal government just, if it gets so bad that they're just going to like forgive these SBA and PPP loans and student debt. Like that's the other thing. There's so many things too. I read that like 85% of student loan debt is federal. And so the president could literally just do an executive order and get rid of it. And do you think it'll get to that place where they just say, okay, all those government SBA loans and PPE, you don't have to pay them back anymore? Because
I mean, yeah, I do see some of that happening, because that is basically what the IMF actually that's what they laid out in their framework. They were trying to find a way for these emerging market countries, these poorer countries, in order to forgive some of their liabilities, to reduce the liability side of their balance sheet so that they can strengthen in order to print their own currency. Because right now, these emerging markets, they're not printing their currency because they fear hyperinflation, because their balance sheet is so weak. So basically, the IMF wants to have a reset, to have some sort of plan to forgive all of these liabilities so that they have the runway to print a little bit more and get themselves out. So, I mean, if the IMF is looking at that for a lot of these emerging markets, I don't see that being far off from potentially something that we also might be looking at as well.
So, all right. Okay. So I'm moving more into crypto. I don't want to own any guns, but I would like to grow my own food. Let me, without getting into too many specifics.
You like your own island too?
Well, if I could, I could have my own island with a surf break right up my front door, and I just grow my own food. I'd be done. I'd be cool with that. What are you doing with that? You don't have to get into real specifics, but like, how are you as somebody that's monitoring this every day? This is your job. How are you setting yourself up financially to handle this?
Well, I don't think the reset is going to come immediately. So as of now, as I said, the US dollar is strong. The US dollar is very, very strong to the point of breaking this entire system. And I think that that trend is going to continue for a little longer right now, because basically every other currency again in the world it's devaluing. So the US dollar is going to continue its run for a little bit longer. It's going to be very difficult to predict the top, but I do think there's still a little bit more runway to go. But aside from that, as the printing goes on, Bitcoin and the Bitcoin and gold are going to be the main inflationary hedges. Because once we start to see inflation at the consumer level already, it's going to be too late. Because by then, Bitcoin, it's going to be so scarce. Because as a retail investor, basically, as a retail person, I do not have the luxury of being like MicroStrategy and just plowing $100 million straight into Bitcoins and doing OTC like that. As a retail investor, I can only get what I can on the open exchanges, peer-to-peer, things like that. And they're not going to be tremendous amounts. So the most I can do is grab it while I can with the available cash. And that's going to be the thing. Bitcoin is going to be more scarce as time goes on, because more and more of these public companies, they're going to be taking everything off the open market. That is going to push the price way up. It's going to be very expensive for retail investors to try to jump onto the trend later on when it hits 20,000, 30,000. And once it hits that, it's just going to be a continuous rally.
Okay. Because the last time too, when you're saying the dollar is very strong right now, but the last time you were on the show, you said there's a lot of companies and hedge funds or whatever that were shorting the dollar, basically betting against it.
Yes.
So when do you, and they're still doing that?
So a lot of the countries, they are betting against the US dollar, but every single bet you're looking at a time frame. So the companies that we were talking about before, yes, they are still short the US dollar because they think that in the long term, as we said, Russia, China, India, EU, they all want to drop the US dollar. They all want to be free of the SWIFT network. They want to be free of this dollar hegemony that they're so bounded to. And also, let's not even forget the emerging markets. They hate the US dollar the most because it's because of the US dollar that they're put into this very precarious position where they're at risk of hyperinflation. So all of these countries, yes, they all want to abandon the US dollar. The only problem is that there has not been a good alternative until now to substitute for the US dollar, because the US dollar was backed with gold. There was no other currency to take its place. But right now, with the rise of Bitcoin, with Bitcoin actually proving itself through all of this market uncertainty, these market dislocations. Right now, Bitcoin has proven itself. It's gaining more and more clout. It's gaining more and more trust, to the point that other countries, other central banks are now looking at it as a replacement to gold as the new Bretton Woods movement, so that other currencies can actually peg themselves to it. Even if it's a CBDC, other CBDCs can actually peg themselves to Bitcoin. So that's the way that it's being viewed right now.
Okay. And then I've heard this too. So that I've heard a lot of people say what you're saying too is Bitcoin and gold. I've heard Bitcoin, gold and silver, or just crypto in general and gold. But some people are like, make sure you get physical pieces of gold and put them in some time as safe, because in 2008, a lot of people just bought paper gold or whatever. And when the crash hit in 2008, they basically it was a scam.
I mean, it's the same thing with Bitcoin, right? It's the same thing with Bitcoin and gold and everything. If you don't own your keys, you really don't own your coins. So I guess that's just the same crypto mentality, that you actually do want physical gold as a hard asset, because if you just have a little certificate saying that you own gold, that's almost the same thing as just seeing your bank account and seeing this number and you thinking that, oh, I have this number in my bank account to spend. When really in a liquidity crisis, no, the bank's not going to let you withdraw that. The bank's not going to let you spend that. The bank won't even let you spend $1,000 on your credit card at that point. So that's why in an actual crunch, no one will be able to redeem their certificate of gold for actual gold. So it's like the crypto mentality, own your own keys.
And what do you mean by own your own keys? Explain that to our audience with cryptocurrency.
So it means that you actually bank yourself. If you own your private key, that means you actually own your Bitcoin. You are free to move it, spend it, transact it however you want, because you are basically banking yourself. And that was the most important lesson for Bitcoin and the most important takeaway, because there are so many unbanked citizens in the world who don't have access or the means to have a bank account. Bitcoin allows you to build credit. Bitcoin allows you to take out loans. Bitcoin allows you to transact seamlessly, not in cash, send money overseas, things like that. And so that's the amazing thing, because you don't need a bank account to do that. All you need is a mobile phone connected to the internet. That's basically all you need. If you own your own private keys, you can do anything you want with Bitcoin, which is the exact opposite of what PayPal does when PayPal owns your keys.
Right. And when you say own your keys, it's like getting a wallet, right? Like a MyEther wallet. You have that on your, like I have a MyEther wallet
Yes.
on my cell phone. And I also have a cold wallet, one of those treasure wallets. So that's what you mean by owning your own keys.
Correct, but you also need the private keys to that wallet, because you can have a wallet on Binance, you can have a wallet on Coinbase, you can have a wallet on PayPal or any of the many, many other exchanges out there. But the thing is, the exchange owns your private key, because you can think, oh, if I put my money on exchange, it's safe. No, because when an exchange gets hacked, that is the exchange's wallet that the hacker stole from. If you own your own keys, you protect yourself. And if you somehow are hacked, that is only because someone else got a hold of your private keys. That is your own fault. But to put your money on exchange, the exchange owns your keys. So the exchange has to be responsible for that. And sometimes, in many, many cases, it's not. And you end up losing your funds, and that's what can happen.
So that's why it's not good to keep your money for a long term on an exchange like Coinbase.
On exchange or anything else where you don't have access to your private keys. So that's the thing. If you own your private keys, you're responsible and it doesn't go anywhere. If you are responsible and don't let anyone else have access to your private keys. But if you trust someone else, another corporation or anything, it's a corporation. It's going to lose stuff. It's going to get hacked. It's going to be at risk. But if you are responsible with your own private keys, it is a lot safer that way, because you know exactly who has access to your private keys. You know exactly how people have access to your private keys. You know exactly how things are moving. With an exchange, it's just so opaque. There's so many levels of bureaucracy in an exchange, in a corporation, in any of these companies like Coinbase, where you just have no idea who has access to your money, who is monitoring your movements. And all of them all have restrictions such as KYC. You can only transact X amount per day. You need to have your identity verified in order to use these services. No, if you own your private keys, Bitcoin wallet, MyEther wallets, those are free services, because in this centralized world, we do not have to provide any KYC information in order to establish a wallet.
Okay. So that's why it's like, I've had people recommend, they're like, Graham, if you have money on Coinbase, move, if there's a bunch, like you're not just kind of actively trading, move a chunk of it over to like your Trezor wallet.
Exactly, because who's to say that one day, let's just say one day legislation comes down and all of a sudden it's like all US citizens cannot own Bitcoin, like for example, because that's what happened in China, right? Back in 2016, 17, like legislation came down in China that was saying that Chinese citizens can no longer trade or something like that. And so overnight, everybody basically had to move all their coins off exchanges. Now imagine if you had a high balance on these exchanges, and these exchanges, normally they have limits on how much you can withdraw in every 24 hours. So you would be in a panic if you held a very high balance on these exchanges, because who knows how regulation is going to be? Who knows if these exchanges are going to be in existence later on? There can be an exit scam. There could be a hack. It could go illiquid. Anything like that can happen to an exchange, to a corporation such as Coinbase. But if you own your own keys, you are safe.
Yeah, but it's not like the American government does like crazy authoritarian stuff to its own citizens. I mean, we're a great nation of democracy.
Oh no, we as U.S. citizens, we only got banned from Binance, Poloniex, Bitfinex, Bitstamp. I'm naming all of the exchanges that I got kicked off of.
That's how many you've been kicked off as an American citizen?
Yes.
Wow.
Yes, and I'm missing a couple more, but BitMEX, there we go.
Wow. God, we're such like frogs in a pot of boiling water, and it's like fully boiling, and we still think, no, we're a democracy. We're free. No, we're not. We're like, this is a complete, it's like a totalitarian, some type of fascist authoritarian government, but we're in a mall. So we think it's nice. Well, there's a food court. You know what I mean? So it can't be that bad.
I know we're allowed to have protests without being shot at, apparently.
Kind of allowed to
Sometimes.
have protests. You're sort of allowed. I mean, like if you're organizing them, then maybe an unmarked van might scoop you up. But so you kind of can have them. And if you resist the police, then they'll just beat the shit out of you. So we sort of can pretend that we have that. All right, Christy. Well, thank you so much, man. I love having you on the show. It's so informative. You're helping me learn. You're helping this audience learn, which is important. So